following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon out near Cape Canaveral discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail and it could not be saved. Now folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome back. Welcome back from the holidays. Hope everybody out there had just simply a great holiday weekend. I know a lot of you still on vacation and traveling, so please be safe out there. But welcome to the December 26th wonderful Wednesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and it is great to be with you, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it's all about. Now, of course, we're out of one holiday and into the next, New Year's. What a great time it is. And so as we reign in 2012 in exchange for 2013, let's go take a look at one of our tools. This is a tool. You want to get out your pad and paper, folks. This is the tool that I call Know Your Outcome. Know your outcome, folks, because as we do reign in 2012, in exchange for 2013, resolution time is upon us. So let me ask you a question. How resolute are you going to be this year about your resolution? If you would like to be resolute, folks, and really take out a pad of paper, get your pen ready, just write down a few things, because I'll provide you during this week here. Of course, we'll only have 3 days. Normally, this would be about an 8-day process, so I'm going to have to find some way to rev the engines up, and but we'll still get you on the right plan here with regard to your resolution. So take a few notes this week, and so when it comes to being resolute, folks, what you need to really do is you need to know your outcome. You need to know your outcome. And there's a lot of folks that say, well, maybe I just don't have enough time, to do things. And when you say you don't have enough time, what you're really saying is that you don't have enough emotion. So what is one outcome that you would really like to accomplish in 2013? You know how you write down a resolution and you end up not following through? And oftentimes the biggest excuse is, I just didn't have enough time. What you're really saying to yourself is you did not have enough emotion. When someone says, I don't have enough time, it really is like, how about if you say you wanted to exercise and you don't because you don't have enough time? What you're really saying is you don't have enough emotion behind the reasons to want to go ahead and exercise. If you don't have enough time to eat right, you just simply don't have enough emotion to be able to eat right. If you say you want to learn a new skill, but you just don't have enough time, what it really boils down to is you don't have enough emotion in order to be able to power you through to be able to learn that new skill. And if you say you don't have enough emotion, folks, emotion is nothing. It's more than, it's a feeling out there. And emotion is really key. You want to make sure that you've got emotion, because emotion is nothing more than E, and motion is all about progress. You have to have emotion out there. Now, today is really about the power of focus. And what I want you to do, and the reason why it's about the power of focus is because focus is the absolute ultimate power. If you want to be able to have power over the things that you want in life, you need to make sure that you've got the proper focus. Can you imagine, some of you out there might have played a game of golf, or you're going to play a game of golf out there. How would you like to walk up to a shot? And this applies to trading, it applies to life out there. But which do you think, if you walked up there playing a shot saying, and maybe you're looking at a bunker that's in your way, or maybe it's some water, some trees that are lined up along the right-hand side. Imagine if your emotion was, if your focus was, I don't know if I can hit this shot. Or, geez, I'm too worried about hitting the water. Or, where your focus goes, your energy goes, folks. And so it's so amazing. Focus is your unlimited power potential out there. And, folks, when we focus, we can change the way that we think. We can change the way that we feel. We talk about changing the way that we feel. You can do it in any moment. And that's really all about emotion out there. So when we change focus, we change our lives. And when we change our focus, we determine the direction that we are going to go in. Real happiness, folks, what it does is it's controlling your focus. Those that fail to focus out there, you fail to focus in the things that really matter. You get caught up into three things. You either get caught up into anything that leads to pain, that's no good. Anything that leads to pleasure, well, that just usually lasts just for a few brief moments out there. And typically, you end up dealing with other people's demands, OPD out there. I don't even know if that's probably something they have a drug for. So on New Year's Eve, as you make your resolution, or as you find time, as you find the emotion to make the resolution that you really want, all you've got to do is ask yourself the three following questions. You want to write this down. What is your outcome? You need to know your outcome. What is it that you really want out there? Number two, what is it that is your purpose? This is the key thing, folks. You want to make sure that you have strong reasons why. Strong reasons why are what? They are strong emotions out there. And number three, just start writing down what specific actions do you need to take in order to accomplish that. We'll spend some time tomorrow, a little bit of time tomorrow, take a look at, write down as many of those things, maybe as many outcomes as you want. Make sure this is where you focus, as many strong reasons why, folks, because outcomes, purpose, and action. If you find enough purpose, folks, you will have strong enough reasons why. You will find the time. You will have enough emotion out there. Remember, folks, our destiny is not predetermined for us. Our destiny is something we determine for ourselves. Let's go take a look at the destiny of the markets out here. While we were away on Friday, we had the Dow finish down 52 points. The S&P was off 4. The composite was down 8. New York Stock Exchange down 22 points. We got signals across the board here that the market is getting ready to turn, albeit on a light volume day, albeit on Christmas Eve. A signal is still a signal out there. So the New York Stock Exchange, gave us a signal. Now we'll take a look at it. Now these are some hidden signals out there, hidden signals that if you'd like to learn about those hidden signals, you can just test drive my newsletter for 30 days. They're always included in there. A ton of information if you want to be able to, if you want to be able to educate yourself, then go over to the homepage at tfnn.com, click on Mastering Probability. It's underneath Breaking News. It becomes easy. Takes you over to my service. You can test drive it for 30 days. Comes with an unconditional money-back guarantee out there. And so we did see some changes in direction of the market. Well, we'll go take a look at actually history of the Dow. We'll just start going back and taking a look at this time of the year, which basically is a relatively flat week here. So you can expect, we'll see if our expectations are met with regard to being a relatively flat week out here. Of course, we are coming into full moon Friday. So as the market moves down into full moon Friday, it's really setting up for the traditional New Year's bounce, the 1 week bounce that would be out there. We'll see how these markets are going to trade. Right now, if you're watching us on TigerTV, maybe you're somebody who just listens to us using tfnn.mobi. Maybe you listen to us on your iPad, your iPhone, your Google device out there. Maybe you got a new device. You can always watch this show. It streams live on those devices as well. Go to the homepage at tfnn.com. Over on the right-hand side, what you will see out there is some little telephone button icons. You can click on this. You can see this show live. You can actually catch the archive of this show as well on your mobile device. This show is archived on Channel 9. We're looking at a 10-minute chart here of the S&P futures contract. What you're going to see out here on my screen, in fact, if you'd like to see these screens in HD, all you've got to do is go check out the Tiger's Den. You can do that for 30 days free. All the charts inside the den are in HD. We're taking a look at expansions and contractions of swing points out there. Right now, what we can see is the ES Mini made a 100% move. Again, we're just looking at a short-term time frame. Although there was put in at 6:40 this morning, the futures came on board at 6 o'clock this morning. You can also see out here as we take a look at Friday's action as price was moving down in the 12:30 time frame in the afternoon. The low got down to 14.19. What the ES Mini was doing, it was making a 1.272 expansion of a set of swing points and a 0.786 retracement of a set of swing points. What the ES Mini did was it stopped in its place right there, bounced up, made probably about a 0.618 retracement, and then went ahead and closed at the session lows for the day, down about, the S&P itself down 3.5 points out there. We did have some movers in the market. Ford was the biggest mover on Monday. I think we had some rebalancing going on Friday. I don't know if that was something to do with the move behind Ford. We'll take a look at it. Ford, though, this morning trading off a bit. It closed out at 12.40 in the pre-market here, down about 70 cents out there. So we'll take a look at that stock chart as well as many others. You can also give us a call at 877-927-6648. We'd love to hear from you. Case Shiller numbers out a little bit earlier, and home prices rising 4.3% versus a year ago. So that's a bullish sign out there when it comes to real estate. And when it does come to real estate, folks, make sure you go to the homepage of TFNN.com, download Tom's paper, The Bull Market in Florida Real Estate. It applies to other markets as well. A lot of great information in there. We can also see on the ES Mini chart, if you're following along on Tiger TV, if we take a look at a swing point high, it came in at 4:15 in the afternoon on December 21st out there. What you can see as the ES Mini, as it popped up this morning here, as the futures, the index futures came online at 6 o'clock, what it did was it popped right up into the 0.786 retracement. Folks, these are mathematical calculations that the market is just part of a way of mathematically identifying breathing patterns or harmony inside the marketplace. The numbers that you want to use 0.382. We really use that as a trending number out there, because if something only retraces, which means pull back to a 0.382, it says that the move in the direction that it originally started in is very strong out there. The ones where you typically will see a market turn, 0.618 and 0.786. Can't tell you why it works. I just know that it does, just looking at this 10-minute chart. You can take a look at that same swing point that's at 4:15 in the afternoon out at 14.28. And as the market made a retracement at 9:10 on Christmas Eve on December 24th, what stopped it dead in its tracks? The 0.618 retracement out there. So you want to make sure that you use those tools out there, because they will help you to identify strength and weakness in the market. They'll help you to gauge an idea of where you should see a market turn. That way, if you're long or you're short and you're looking at the intraday chart patterns out there, you can expect it. There's nothing like being able to meet your expectations out there in the marketplace. When we get back from the first break, we'll go take a look at the index futures. We'll start off probably taking a look at the S&P 500. Right now, what we can see is you've got this long wick down here. Boy, there was some whipsawing that went on the evening of Thursday, I believe. It was Thursday evening last week, December 21st out there. And the question's going to be, is the ES Minis, the S&P future, going to go all the way down into that 1391 level? We come back, we'll answer that question for you. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Let's actually go over and take a look at the Dow futures out here. Right now, the Dow futures look like they're set to open up maybe about 14 or 15 points out there. Right now, trading out at 13,093. Now, you know, on Thursday, as I blow this chart up here on the screen, obviously as the fiscal, and I call it Merry Cliffmas, as the fiscal cliff negotiations, stalled out there at about 8:20 in the evening. Big push down in the futures markets. In fact, the Dow futures there was about a 300-point move. Dow futures got down to about 12,963. Closed a little bit lower inside this bar here, inside the wick of this bar. And if we take a look at retracements, just simply coming off of the November 16th low, let's go take a look at that. The low out here in the Dow futures was 12,434. Made a run all the way up to the high on December 19th. What you'll also see is that the retracement there was a 0.382 retracement. Now, that is a normal retracement on any move. And when we talk about retracements, folks, what I'm really talking about where you see the most significant change in trend out there. There are certainly swing points points within swing points. It's like driving down a road and you come to either major intersections. Those are the ones that we focus on. As you drive down the road, you also, pass other streets out there without, let's say, maybe without stoplights, without traffic lights out there. When I'm talking about swing points, we're doing some measurements here. We're really looking at key areas where you see a change in trend. So there's no question, as I pull the chart back here, you can see a change in trend that took place with the low that was established on November 16th. So that becomes the area where the swing points are. We use the low of whichever candle is out there, November 16th low, 12,434. As the market moves up, as it retraces back up. And when I say retracement, I'm talking about off of the high that was established on October 5th down to the low on November 16th. That's probably about a 0.786 retracement. I won't go measure that right now. But as the market was pulling back and it was making its highs here on December 19th, and then now what we've seen is we've seen a change in direction. Well, when you make that change in direction and you're measuring between two swing points, the first area where the market will travel down to is that 0.382. If in fact the 0.382 level holds, as I said early on, what it says is you see a strong move up. You'll see a strong A to B equals CD up. However, what we do know is volume is always right now pushing to the downside. We haven't seen any real significant on a daily basis, on an intraday basis, to the upside. All the volume is to the downside. What does that set up? It sets up more likely a retracement of the Dow back to the 0.618 level. The Dow futures would take you into the 12,000, looks like 12,772 area. We'll take everything one day at a timeout here. But right now it looks like, in fact, what could occur is you could see an A to B equals CD down. As I said, coming into this Friday is the next full moon out here. But the lunar cycle between the full moon and new moons out there haven't really been great triggers out there. So I would say and quite frankly, when lunar activities occur, you're really looking those to be a trigger for other patterns that are out there. What is most important is the pattern. So you want to be paying attention to retracements, to price out there. And we'll see if the Dow here is getting really ready to set up an A to B equals CD down. That would take it in the 12,151 level. If it does that, folks, then it says that the Dow would be coming all the way back into the June lows. And I suspect that is what it wants to do out there. So be careful. If you're long and strong, just make sure that you've got some decent stops in place. Make sure you've got the right money management strategy. And of course, it's going to be about Apple. We'll see what Apple does here today. Right now, if I take a look at Apple closed out at $5.2017 on Monday, trading out down about $2 right now, out at $5.1856. Let's go take a look at Ford. I mentioned Ford earlier, so let's go see what Ford is doing. Had a real strong day. In fact, Ford is one of the equities that is on my buy list out here, and I was looking take a look at Ford here. It had volume, had some really nice volume on Thursday. Thursday did about 94 million shares. Thursday, what it was doing was coming into this downdraft swing point from April 27th. That had 76 million shares. When you come into a swing point with volume, which it did on Thursday, says you want to go at least test out the top of that. The top would have been 1204, but no, on a Monday session here on Christmas Eve, what you had was Ford just simply give you one of those type 1 candles. That candle right there on a scale of 1 to 10 on Steve's Richter scale, with 1 being the strongest. That was a type 1 candle. Plus, it had the volume behind it as well. What Ford was doing, Ford really trying to get up to the highs out here from the January 26th level. That is an area of resistance, making A to B equals CD up patterns. Ford is one of these equities you want to have on your buy list, most certainly, and take a look at it on the next pullback. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 29 points right now, S&P up 2. Composite up 1, small caps slow to get out of the gate here right now, up 94 cents. Microsoft up 3 ticks, Intel up 15, Google back $1, Cisco up 12 cents, Apple trading down $1.80. You've got the Herbalife having the biggest bounce out here this morning, up $1.14. That's up 4%. United States USO, the oil ETF out there, is up 2.5%. Baidu up 89 cents out there. Not a lot moving dollar-wise to the upside. To the downside, side, you've got Amazon leading the charge on the way down off $3 here. That's off about 1%. Apple down, as I said, $3. Six Flags Entertainment off $1.54. Let's see, percentage-wise, nothing large percentage-wise as well. Go back to Ford here. We got Ford trading out at $12.50. And I do expect that what we will see is you do not need to chase Ford up here. In fact, I do not recommend it. If you are watching us on TigerTV, what you are seeing is you're seeing that Ford is moving into that overbought area. That is getting above the 70% line on the relative strength indicator out here. And if we just simply, I'll go back and take a look at the chart. You know, if you ever bought something, you were chasing something, and you thought it was a good investment, it was moving up, and you said, I want to get in on this action out there, only to find out that you thought you were the cause of buying it at the highs. Have you ever said that to yourself? If you have, say aye. Absolutely. Well, all you needed to do was just simply put this RSI indicator on your chart. Take a look whether you were moving into overbought, oversold. If you're at a midway point out there, why? Because if you take a look at Ford here, each time it gets up into this oversold area, did it the last time was between the time period of September 6th and September 19th. You just needed some patience for it to pull back, and which it did, and pulled back into the price point of about $9.71 out there. If we go back a little bit further here, last time it was into the overbought area was really November 6th. Went ahead and pulled back. Now, in case of November 6th, what it did was it pulled right back to where it broke out. This was your buy signal out here, which was the October 26th candle. 43 million shares. Of course, you're really benchmarking it against the 137 million shares on October 31st. So that was an area not to chase it because you were getting into overbought territory. If you had been paying attention, which I was not paying attention to the Ford chart back then, and you would have noted the open window out there, you would have noted the breakout, you would have wanted to see Ford pull back on less than 137 million, preferably maybe 43 million. And as Ford was pulling back on November 15th, November 16th out there, about the 45 million share level, that was a beautiful thing. Rejected that. You had this little doji candle out here. That was on November 15th. Said that things were slowing down a bit. Got a little bit lower close coming into that area where it broke out. And then you really got your signal here on the following day. You could just simply be patient because you got this nice move up on November 19th as really it pretty much gaps up. Now, there was not an open gap up there from the standpoint of the high of the prior session on the 16th. The high was 1064 in the low. Well, there was 1065. I guess there was a 1 penny gap out there on November the 19th. But that was your trigger to have taken a trade on Ford out there. Now what you want to do is you want to be patient, because what Ford is going to do, it's going to run into this horizontal resistance area. When you are trading equities, you want to be able to identify support and resistance. Make 100% move of a move. You can see you've got an entire set of really swing points out here, and that's going to be at the level somewhere. The high there is about $13.05. Ford at $12.57. Do not chase it. It does not necessarily have to get all the way up to those highs. Right now it's trading into or close to the lows of that area. It still qualifies as about 100% move of a move. Just be patient on Ford out there. Let it go ahead and work off that oversold condition. It could do that simply by moving sideways. That's what we've seen happen in the futures market out here. And I say just be patient out there. And also, right now what we're seeing is we are seeing a possible change in trend out there. Got that first indication in the New York Stock Exchange on Monday's trading session out there. If we go take a look at a couple indexes, if you were just taking a look at the index, give me a moment here. We'll go ahead and pull that up. And you're taking a look at the New York Stock Exchange Index, what it also did on Monday. Now, it's testing an area of support, no question about it. However, there's some internal indicators that suggest that things are about to turn in the New York Stock Exchange. That's important because that has been the biggest breadth of the market out there. On Monday here, New York Stock Exchange coming back and testing the open window. So it's tested it twice now. What I'm referring to is the gap up. I'm referring to the low of the December 18th candle. That's 84.16. That level was tested on Thursday, tested on Friday, which held, tested on Monday, which held. I do suspect that that area is going to give way, and what we will see is we will see the New York Stock Exchange move all the way back into the November 21st area. If we just simply take a look at off of the low to the high out here, the low from the November 16th to the high that was put in on December 19th, on December 20th out there. Let me put that in black, might be easier for you to actually see. What you will also see is that's an area, the 0.618 levels, 8,100. That's an area of prior support out there. That was the session here, which was this was the full moon session, I believe, on November 28th out here, where the New York Stock Exchange moved down to the 8,074 level, rejected that area, closed at its high. That is like about a 0.2, 2.5 on the 0 to 10 Richter scale of strength candles out there, and that's on the New York Stock Exchange. Let's go take a look at some of the Dow stocks out here. Let's go take a look at let's look at IBM, see what IBM has done. I didn't look at IBM here over the weekend, so let's go take a look at it here today. You can see IBM really just traveling in a sideways consolidation area. Ran into resistance, which was the right now we're going to move this up to the top of the candle of the downdraft from November 6th out there. So you've got resistance in IBM out at the 196 level. It's trading at 193.48 right now. IBM did have some volume to the it moved lower. Certainly was volume to the downside on December the 21st out there, as it 8.2 million shares to the downside. Let's actually go into the Dow chart here. So let's go on a little tour, and let's go take a look at scenes of Christmas past. So let's go take a look at the December time frame in 2011. Let's go take a look. In fact, I'll get a little tool out here as soon as I can find it. I think it's this tool right here. So let's go back into the December time frame and take a look and see what type of activity do we have. So if we take a look at coming right off of the Christmas break here, let's use it as December 27th all the way to the the December 30th area. Here is right there, this area. I'll just actually go ahead and shade this. Maybe I'll turn this, let me turn this thing on here. Make it a little bit yellow area. You'll be able to see that. You can see really in a very kind of a flat trading range here as you came into this week. I suspect that we will see the same thing going on this week. That was 2011. Let's go take a look at 2010. So let's take a tour back in time. We'll grab that little tool out here again. So we're going to take a look at December. In this case here, December 27th. So December 27th, inside the Dow, it had opened at about 11,572. Let me just draw this little square out here. We're going to go all the way into December the 30th. December 31st, so that's the area right there. You can see basically relatively little movement out here. Let's go back to 2009. I think you're going to get the pic. Now, as you take a look at this area here in 2010, here's the first week in 2011. A little bit more movement to the upside as I come back here in 2012. Certainly some more movement to the upside. Now let's go back a little bit further. This was 2010. Let's go take a look at the 2009 time frame. And all we're doing, folks, we're just doing some easy things. We're just taking a look at patterns that are out there just so that you can get an idea, so that you can understand the way that markets operate. If these patterns don't work, they certainly will give you a ton of information. So now we come to the December the 28th time period. So this must have been a weekend as we take a look at just coming back from the holiday right there between the 20 and 2009. You'll see basically very little movement. Here's the first week in 2010. First week of 2010, the markets move higher before they start a retracement here. This was actually about 2 weeks out there. Went to January 20th. This is 2009. Let's go back and take a look at 2008 for you. So if we do the same thing, I'll go ahead and use that little tool. That way we'll be able to go ahead and draw those patterns in here. So now we're at December. So we came back from the holiday break. It was actually on December the 26th out here. So let's run the same tool over. This is going to take you to December 31st. What you'll see is really not a lot of price movement out there. You did get it for a couple days when we came back into the new year, and then the market kind of gave it up. Something to think about. Are you seeing a pattern out there? I think you are, or I think you at least should be taking a look at these patterns because, as I say, we got some signals in the marketplace that say, hey, be careful. Now, this is back in 2000, and this is in the 2008 time frame. Let's go take a look at 2007. Then we'll go move on to a couple of other stock charts out here, but this will give you an idea. Whoops, didn't want to do that. Was really trying to grab this tool. So now we're going to take a look at 2007. We're going to look at the December. We're going to start here as we came back on the 26th. Now, December 26th through the 31st out here. A little bit of movement to the downside in 2007. Of course, we know the highs were made out here, right here, back in October of 2007. But even during this time period here, not a ton of movement. You had the the S&P basically open at 13. I'm sorry, we're looking at the Dow, 13,547. When it closed out December 31st, it was closed at 13,365. Not a ton of movement out there. Of course, let's go back. Let's take a look at one more out here, just as long as we're reminiscing. Let's go back to 2006. Let's go take a look at the 2006 time frame. And folks, these are things that you ought to be doing yourself. This has nothing to do with really any type of chart patterns, but just trying to understand what your expectations should be and how the market has normally traded. So as I say, there's reason to believe that this week should be relatively quiet. As we came back from the break, it was December 26th that the market opened, just like today here in 2006. If you go from 2006 to December 31st, that was December 29th out here. This was the movement inside the Dow. Really not a ton of movement out there. And then, of course, in that first couple weeks here of January, the market moved higher before you had one heck of a move lower. That was back in February. So hopefully that helps you to understand what to expect out here. Let's go take a look at Apple. Let's go see if Apple is beginning to test some of its lows out here, that 505 area, trading out at 517 right now. So let's go take a look at the applesauce chart out here. Question for you. In your family, or or folks that you know, were there as many Apple products bought this year as there were last year or the year before? Kind of makes you say, something to think about. As we take a look at Apple, it's trading still inside Steve's hammer candle. That, folks, is the candle from November 16th. You want to understand your candle patterns out there. In fact, if you were trying to create the ultimate money machine, the very first place that you need to start is with your candles, because that is understanding the psychology of the marketplace. This is nothing more than psychology, folks. This is all about the patterns that we trade out here. It's really all about psychology. You want to be able to understand your own psychology. You certainly want to be your own psychiatrist, psychologist. You want to be the psychologist of the marketplace, and candle patterns are really where it's at out there. In fact, you can test drive. I've got a workshop out there, full-day workshop. You can, if you click on my name on the homepage of tfnn.com, you'll see it somewhere down towards the bottom, and it's a way of being able to learn candle pattern information, Japanese candlestick charting. You can learn it on your own. It will take you thousands of hours, or I can compress decades into days, certainly thousands of hours into about 6 hours out there, and it's something that you have archived on your members page for, I believe it's 60 days out there. So you want to really, if you're just trying to figure out, hey, where is it that you start, I will tell you that is the place to start out here. So we are taking a look at that November 16th hammer candle, that low, 505.75. You got a little bullish engulfing out here on December the 17th. That low also 501.23. Apple after the holiday season not really moving here too much. Apple's going to come back down, and it's going to test the low of the bullish engulfing candle. I believe that's going to be the 501.23 before it gives you its next signal. Only 27 million shares there. Of course, what it really needs to break is the hammer candle. That's acted as support. That is 45 million shares. You get a close below 505.75. If you are long Apple, I can tell you one thing. You are wrong being long Apple. That is one of the candle patterns that you want to be able to learn out there. That would set up Apple coming all the way back down to the open gap here from January 25th, 2012. That would be the first area where it would move to, and that's going to be in the 443 to the 419, 425 level. It's trading at 517. That's just a $100 drop. That will be your first area where it would move to. What has Apple been doing since it got into that oversold condition? Well, it bounced up. Now it's just simply moving sideways. You can see in Apple, when it comes to relative strength, this is really relative relative weakness. This has not even gotten to get above really that 50% line much at all. 877-927-6648. Thanks so much for being here, folks. The Dow is up 25 points. The S&P is up 1. We'll go take a look at Medifast. They're down 10% this morning. Then maybe take a look at Baidu, Goldman Sachs, up 2% and 1% as we speak right now. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. And Medifast, the weight loss, I don't know if it's clinic, if it's... in any event, they are shedding some weight this morning. The CFO resigning. It is trading off 10% down $3 and change out here. That is the stock chart that we've got up on my screen here. We're going to actually start off with the monthly chart and then go dive down into the daily chart. On the monthly chart out here, if you're taking a look at it, you're taking a look at a resistance area that in essence has been in effect since December of 2009. Every time Medifast gets up into the $32 level, you can see it is an area of resistance. This is nothing more than just simply drawing straight horizontal lines across your screen. You know, if you're inside a stock, you want to make sure you understand what the monthly chart looks like, what the weekly chart looks like, what the daily chart looks like, because it will help to paint the patterns out here. This clearly was showing that as it got up into those areas, you could expect, or at least in the past, for it to pull back. That area now on a monthly basis, a very, very strong area of resistance. Of course, in this case, this equity here had a bearish engulfing, monthly bearish engulfing extraordinaire. The month of January 2010, big volume to the downside out here. This went from a high of 34.33 down to 16.38. That's a little haircut out there. Did it with volume out here. You can see that was volume off the top. And so on a monthly basis, a damaged stock. We haven't seen any kind of volume to the upside. Just take a look at the bars that are along the bottom here. Now let's go take a look at the weekly chart. The weekly chart shows you where that downdraft also began. You can take a look at the week here of January 15, 2010. The high there was 31.17. If you just simply drew a horizontal line across from the top of that, you can see how that area is acting as resistance. That way on the weekly chart out here, you can see you're starting to get the bearish signals here, really the week of December 14th. With that little doji candle out there as it was running into an area of resistance. You can see the bears started taking control. They took control here last week as well, December 21st, and certainly today we will see it as we go over to the daily chart out here. You will see that it is pulling back with some decent volume. So far, you've only been the market's only been trading on a light trading volume day for 26 minutes and 310,000 shares coming out of it. Medifast will come back and it will test this window. It had a nice sign of strength out here. July 27, 2012, 1.4 million shares to the upside. As we draw the line across the top of that candle, that price is $26.43. We'll go ahead and draw that in black. You can see it's trading just underneath it right now. I suspect you get your first piece of information as it moves into this window out here. But we do know that on the longer term chart, so normally you take a look at perhaps buying a breakout if this thing came back with lighter volume. What you know now is you certainly know where you've got some significant resistance in Medifast out here. And really, although you would like to buy breakouts, this may not be the breakout that you would be looking to buy out here. It does have that sign of strength, and maybe put this one on your stock charts as one to follow. I'll go ahead and keep it active on mine. I'll just need a reminder to go take a look at it, since Medifast is not one of those stocks that typically I trade. Let's go take a look at we've got Amazon here. Let's see if I can find the Amazon chart. That is trading down a bit this morning. Nothing big volume-wise out here. And so nothing other than Amazon making a little double top out here, which was off of the September 14th high. That high had 14 million shares. It got up there with 16 million shares. Did it get over? Let's see. The high was 263.11. And the high from September 14, 264.11. How about that? Missed it by $1. Still trading inside there. I suspect we'll see Amazon. Well, that's the weekly chart I'm looking at. Folks, thanks so much for being here. Stay tuned. The Money Masters show will be up. We're trying to get Tom to come in here for the latter half of the show. If you're off to start your day, be safe, have fun, and we'll see you tomorrow morning. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.